Hey, property management friends, welcome to This Week in PM. I'm your host, Jeremy Pound from RentScale. We've got an exciting episode today, talking about all the ways that you can monetize your property management business with our special guest, Todd O from PM Assist. And as always, we'll start out with a quick highlight from a previous episode.
I know a lot of people love to share, a lot of consultants in the industry. It's easy targeting for them to say, did you know that more doors doesn't equal more profit in your company? And we totally get that. That's a great tagline. And we actually agree. This is why we focus on more clients you love. But I will say, when you have optionality, when you're attracting more owners and you're getting more demand, it gives you the ability to be more selective. And now you have the power to maybe charge a little more. You have the ability to enforce your policies, to charge more fees. You have the ability to replace the clients you don't love with new clients. Well, I totally get it that it's very in vogue out there to basically say, look, more doors doesn't always equal more profit. I've yet to meet a business owner that doesn't want more opportunity. And that's what we're really going to focus on.
Today's interview and our scoreboard are pretty in-depth today, so I'm going to keep it light on our intro. I'm excited to bring Todd on to share some of his insights on how to bump up your revenue. And if you don't know, Todd actually writes a regular column for Strategic PM about how property managers can create more profitable companies. He also runs a larger property management company in Atlanta and helps property managers introduce new fees and upgrade their operations through his consulting company, PM Assist. But first, we're going to hear from Jen with our latest business development scoreboard. That's right. We've got February's numbers, and we're excited to share them with you today. We're going to turn it over to Jen right after a quick update from one of our partners.
Hi there. Did you know that RentScale hosts one of the largest communities of property management sales professionals in North America? Well, my name is Reese Register, and I'm actually a previous BDM and currently a scale coach here at RentScale. We provide over 20 hours monthly of teaching and training and accountability to make sure that our BDMs are supercharging their sales business through inbound, outbound, and allbound. So if you're interested in learning more about supercharging your business, go over to rentscale.com. We'll be glad to schedule a consult and see how we can help you transform your business today.
Hey everyone, back at you with another Scale Club scoreboard update, this time for the month of February 2025. If you watched my January update, you likely saw a heck of a lot of red on that scoreboard. Well, I'm happy to report that February is a lot more green and we've got some awesome news to share with all of you. But before I dive into those numbers, two amazing things happening in the month of February within our Scale Club community. Number one is we started what I'm going to call, or lovingly refer to as, outbound blitz sessions. And this is where business development managers can come to a 1-hour coaching session with our coaches where we are literally picking up the phone and dialing outbound after outbound. We are making sure that BDMs have not only the accountability to block that time off in their calendar and make those dials, but also that they have a coach there so they can perfect their script. See, it's not just about picking up the phone and dialing. If you're not saying the right thing, or as we say, if it's not compelling, then it probably isn't selling. And so our coaches are sitting on the other end of the call, listening to these dials one after another, and they're there for immediate guidance and feedback so that we can make every outbound call that much better. At the end of the day, outbound calling is all about the script you have and how well it pertains to the people that you're trying to talk to and how you're engaging with them. So these call blitzes have been so much fun, both for BDMs and for our coaches. Can't wait to continue that because organic growth is the name of the game and it cannot be only from inbound leads. Huge focus in our community on that outbound. Second thing that's really exciting that we have going on is an owner's skill dev on March 14th. We here at RentScale have always hosted skill development sessions for BDMs every month where we get the entire community together and we train on one topic that we are seeing happen in property management in that moment. Well, we realized that it was important that not only BDMs, but owners we're fully equipped to handle the success that we are infusing into property management companies. And so we are starting owner skill development, where our owners are going to learn how to better manage their business development managers, how to provide them with more tools so that they can focus. We're also going to be really diving deep in on different diagnostic tools so you know when it comes to lead generation, closing business, and then multiplying business, what is and isn't working. So we're excited for this first one, but I'm just excited that we're building in some training for the owners, not just the business development managers. If that's something you want an invite to, you can email me at jennifer@rentscale.com and we can get you added to the list. All right, so that's enough delaying. Let's talk a little bit about the numbers for February. As you guys can see, we were up in total door count, 337 doors for the month of February across our community. Chicago leading the way with 26 doors, Tennessee with 25, Salt Lake City, Utah with 22, Portland, Oregon with 20, and Sacramento, California with 16. As I look at that board, we have some amazing success stories of companies and BDMs that were down and out on their luck last year, and look what they're doing this year. So it's just a reminder that in business, whether you're an owner or a business development manager, the good things don't come easy. So we have to stick with them, but I can clearly see that it's paying off on the scoreboard. Across our community, across the entire thing, about 8 doors on average for business development managers. And that includes everyone from brand new BDMs coming into Scale Club yesterday, all the way up to the people that have been with us for 3 and 5 years. 11 doors for the top 50% of our community. That's up 35% from last month. So like I said, lots more green and good stuff to share. Lead volume, however, was down at 16 on average for each company. Our clients are 80% of the way to their goal, their forecasted growth goals, and we as coaches are going to continue to do nothing but support them as we move forward. So we are excited for March as we expect that spring pickup as things get rolling, and we cannot wait to see what BDMs are doing this month. All right, that's it for me. Back to you, Jeremy.
All right, I am here with Todd O, as we affectionately call him. As I like to call him, the Todd father of fee maxing. Todd, welcome. And can you tell the audience what fee maxing is?
Yeah, definitely. Thanks for having me, Jeremy. I would describe fee maxing really as getting the maximum revenue out of each unit you're managing instead of focusing so much on the management fee and the leasing fee, looking at total revenue and trying to get that number as high as you possibly can.
Excellent. Okay, so what are maybe some of the fees that people might be overlooking?
Yeah, I mean, some of the big ones that are some of the maximum boost to revenue or things that people might have heard about, things like, a resident benefits package, pet fees, those sorts of big ticket items. But there's also a lot of things that people don't think about, which would be things like risk mitigation fees, or security deposit waivers handled in-house. So, I mean, I teach, 75, 80 different fees when I do a course on this kind of stuff. So, I mean, there's a lot of different ways you can make money. It just really depends on how you want to structure it and all that. But I mean, there's a lot of ways where you can get really double the revenue out of your PM business because traditionally the revenue was coming management fee, leasing fee, renewal fee. That's basically it. And you can pretty much double that if you do it right.
I appreciate the pet fee coming up as you give the doggo scratches. I saw that.
I've got the blurred
Right on
screen. I was
cue.
hoping you wouldn't notice that.
Right on cue. No, it was great. They're blurred, but we can see it. It was awesome. You'll probably hear my dogs bark before the episode's over. So why should property managers consider this? Obviously, with anything in business, there's friction, right? You add something, you have to explain it, maybe the competition's not doing it. So why should property managers consider FEMA?
I mean, lots of reasons. The first one I would say is there's heavy compression of management fees. So we're seeing commissions get compressed, and especially in the bigger markets, you look at places like Atlanta, Phoenix, Orlando, San Antonio, any of these places where you've got a lot of property management companies, you're starting to see a lot of compression on those. I remember when I had an office in Orlando, when I drove to our office, I would pass by somebody who was advertising, I think it was a 5% management fee. And, it was just a big sign out in front of their office, 5% monthly management. And I just looked at that and said, if you're only charging 5% for your monthly management fee, you can't run a business profitably. It's just impossible. So, if you're going to deal with that kind of competition, you need to have some other way to boost your revenue. That doesn't necessarily mean you get it from your client. A lot of it can come on the resident side of things in most states. And that's generally how I recommend people try to do it. But you're going to have to find some way to do that. And then, of course, it's also a way for you to provide better service. You can upgrade your systems, you can hire more people, you can have call centers. There's a lot of stuff you can do to improve your operation and the service you're offering when you've actually got revenue to pay for those things. Revenue solves a lot of problems.
I definitely agree with that. I like to, the term that you've probably heard me say as we've talked about this is you can tell owners that you can financially engineer the relationship to make more sense for everybody. So without me taking cash flow away from you, Mr. Owner, I can provide a better service. I can better manage the asset. I can better predict, how to manage this asset in the future. And I'm just basically financially shifting some of that money that needs to be paid for. Let's just be honest, like good services require revenue to pay for the service. Like, we're not running nonprofits here, but we're also not just padding our pockets. We're taking this money and we're investing it in a better service. And as a professional, that's what we should be doing, right? We should be elevating the game. So I think it's really great. So you kind of alluded to it. I was going to ask that. I think a lot of people hear fees and they immediately think, oh, the owner is just losing cash flow. But you're saying there's lots of parties involved in property management. So maybe walk us through some of the fees that somebody hearing this, watching this for the first time might not be thinking about that could come from, vendor work or the residents or from, basically like walk us through some of the more surprising fee maxing models that you've recommended.
Yeah, sure. I mean, so you mentioned vendors. So I mean, you can start off there. Any PM company that isn't making money on maintenance is making a huge mistake. Because I mean, this is number one, the most important part of your property management operation. Nothing is more important than maintenance from an operational standpoint. So you're having to put maximum resources into this if you're doing it right. And if all you're getting is a management fee, then you're just not able to provide those resources. So you got to make money on it some way. You can either have a maintenance company and make your margin that way, or you can charge some sort of maintenance oversight fee. You can charge a commission on top of a vendor's invoice. There's a lot of different ways to do it, but you got to find some way to do it. I mean, this is literally thousands upon thousands of dollars a month for the average size PM company. And when I talk about average sized, I mean somewhere around 250, 300 units is what the average PM company in NARPM is. So, if you're at that size, I mean, we're talking six, seven, eight, $9,000 a month that a lot of companies are missing out on. And as you know, I mean, that kind of revenue can make a huge difference in trying to hire better people, bring on better technology, any of that kind of stuff. So you can get it from the vendor side or the maintenance side of things that way. You can also set up rebate programs with your vendors. So you're not just getting money on the owner side, you can actually shift this and have a preferred vendor program where your vendor rebates you the money. So you're actually making money off of that relationship with the vendor because they want that ongoing relationship with you. So you can actually divert where that money comes from or even get some on both sides of the equation. So that's one area. Then on the tenant side of things, there's a lot of different places you can get money on the tenant side. If you look, I always tell people to look at multifamily because that is a much more mature industry than the single family PM space. They've really got it down to a science. They've got giant companies that have worked through all this. And if you look at what they do, my wife and I rented up in Illinois and over in Noonan, Georgia for a little while. I was going back and forth between both, and when I looked at what I was paying up there, they got Valley Trash Service. They've got, of course, pet fees. They've got inspection fees. There's all kinds of fees that apartment complexes are charging people that for decades property managers weren't charging while multifamily was. So a lot of this stuff is just kind of harmonizing what multifamily is doing with what the single family industry is doing.
Well said. Well said. I think anybody who's lived in some of these big box buildings that are going up, like you said, they're just more professional. It's in the lease. You know what you're getting into, and yes, there is just a far more aggressiveness that they bring up before you actually move in that I think is something we can learn for. So I guess that's a great share. I think the biggest eye opener that as I learned about this from you was we think that the revenue in the property management business can only come from the owner. But as we know, we've been charging application fees for decades, right? There's nothing wrong with that. We've been charging late fees. And there's a lot of services that the tenants are actually happy to pay for, not just something that's going to make them feel like they're being taken advantage of. Like you said, valet trash services, there's all kinds of things that we see out there. So I think it's great that you're bringing that out. And I want you to give away the whole farm here, Todd, because obviously people come to you to learn about all these. Now let's focus on the contrary to this, because this is something that, we see in the industry. We talk to people come to rent scale because they want to hire, they want to grow their business, they want to invest in marketing. And one of the first things that we run into is, oh, I don't have the revenue to support those types of investments, right? And so we immediately start thinking, okay, well, what is your revenue model? What's your average cost per door? And so I want to ask you about that. I mean, what is, in your opinion, you work with a lot of clients, there's no right answer. What's a healthy revenue per unit per year that you want to see your client?
The average in the industry is right around 225. So that's what we look and we see that's kind of across the industry when you survey everybody, that's what we see as kind of an average number. Now I see when I work with consulting clients, I see as low as $90 a door. It's crazy how low it can get. But what we're really shooting for, kind of the benchmark is 325 plus. If you look at the NARPM benchmarking standards, it's right around 325, 335 is where the top 25% of PM companies are. Now, the best of the best, so if you're looking at, my business, Tall Kramer is another person who's really done really well on this, also here in Atlanta. Rudy out in Texas, who I think you guys have worked with. We're talking amounts like 450, 500, 550 a month that people are getting off of these units. So if you really work at it and try to implement everything you can, and you've got a top tier operation, you could be making 500 plus per door.
And that's monthly, right? So again, I'm in sales, so forgive me, but if I do quick math, it's about 6,000 a unit per year. You sell a door, average, they might stay with you 3, 4 years, hopefully longer. I mean, you take 6 and you start multiplying by 3, we're at 18K lifetime value. You add another year to that, it's huge. These are um this is a small hinge that swings a big door, for lack of a better word, right? And so, any stories you want to share, Todd, on kind of like somebody that came to you and they're like working their tail off and they're making the $90 per door, and then you did some things. What does the life look like when you start to be the Rudies or the Todds of the industry?
I mean, the first thing I would say is it lets you get work off of your plate, because at that point, when you start to bring in that kind of revenue, if you're the owner of the business who's been mired in day-to-day work and property management, you're finally able to say, "Okay, I can hire an operations manager, or I can hire another property manager, or any of those, whatever you need to do to bring on more help." And then suddenly you're able to spend time doing other things. Like for me, I spend like an hour, hour and a half a day on my property management business. The rest of my day I spend on consulting work, educational work, that kind of stuff. I don't spend hardly any time in property management. So from the perspective of an owner of the business, it really lets you hire the people that you need to and put the systems in place that kind of lets you take a step back and be the big picture person for the company instead. But then from a customer client perspective, it allows you to set up all this stuff that makes everything work so much better. So I mean, you can have call centers for maintenance, for you know our phones are answered 24 hours a day for everybody, no matter who wants it. And that's only possible because we collect enough revenue to pay for those sorts of things. So, all that stuff becomes possible when you start making money. And when you're at $100 a door, you can't afford any of that. You're just struggling to pay your base bills.
All right, that's a great share. All right, so pushback when we bring this up or when I'm talking to people, let's address some of the pushback because I get where they're coming from. We build sales playbooks, as you know, Todd. and everybody wants to, compete on the best offer that they can. So, how can property managers address the negative perception of nickel and diming, for lack of a better word, while introducing these fees?
Yeah, I mean, first thing I will say is there is a much bigger concern about this than there actually should be in reality. So everybody is really, really worried that if they add a few fees, they're suddenly going to get a ton of pushback. Potential owners are going to be really skittish. And the reality is, I mean, we've implemented this across the country with hundreds of people at this point, hundreds of PM companies in all kinds of different markets, and that just doesn't happen. Now, you do get occasional little objections here and there, and that's where a sales playbook really comes into to play, because we have ours, you guys did it for us, and we've got everything in there from how to respond to an owner who's concerned about maintenance commissions to, how do you answer an owner about the security deposit alternative program. Those questions do come up, but they're not common. We don't hear those things very often. Most owners are concerned about three things: what's my management fee? What's my leasing fee when you find a new tenant? And what's my renewal fee? That's all they're looking at. It's just like when people buy an airline ticket, all they care about is the airfare. They're not thinking about their parking, their Wi Fi, their food, anything else. All they're thinking about is the airfare. So it just doesn't come up very often. I'll say that first of all. But there are certain things that you have to be prepared for, and a BDM needs to have those sorts of things in their back pocket to talk about. So, for example, maintenance is a perfect example of this. So, if you're a company that is using third party vendors and you're charging a maintenance upcharge, that's how I do it at my PM business. I think that's probably how most property managers across the country are doing it. you know, you will occasionally get an owner who'll say, "Well, why should I pay you a commission on the invoice? You're making money on maintenance that way." And my answer to that, and I think it's in our playbook that you guys wrote, is, well, it's actually better for you that I don't have my own maintenance company, because then I have a real, incentive there to charge you for all kinds of stuff because I'm making a 40% margin. A lot of people don't realize that. Some of these in-house maintenance operations make 35, 40% margins. I have a real incentive to get as much work done on your house as I possibly can if I own that maintenance company. And, if I'm just sending vendors out to get you bids and then you're picking the lowest bid, I'm not involved in making money on that. You're just picking the bid that I got you. And we'll even let owners pick their own vendors as long as they meet our criteria. So if you got a vendor you like that gives you a great price, by all means, we'll work with them, because I'm not here to basically make a 40% margin on maintenance like some other companies are. And that's how you can kind of turn it around on people and say, hey, this is actually an advantage for you that we do it this way with third party vendors, as opposed to us having this incentive to do this. I always tell people everything is always about incentive structures. Look where the incentives are, and then you can figure out how they're going to behave. So, if you set it up that way, then you can easily respond to those kind of objections.
Oh, yeah, that's great. And yes, I do think that every playbook we've ever written, every objection that anybody has is actually always in the owner's best interest if it's really thought through well. Now, they don't like it, but they have to pay for it. But at the end of the day, it's typically in their interest. And that's great. And by the way, here in South Florida, Todd, I mean, just in my own house, getting like an AC vendor out, a garage door fixed, like, you're just standing around waiting forever. Nobody shows up on time. You're calling 3 times. I mean, I think most property owners should understand. You don't just call a vendor, have them show up, and everything is perfect, right? There is work, dispatching, dealing with the tenant, getting them in, and just explaining that work usually makes a lot of sense when, people are reasonable when you show them what they're not looking at, for sure.
Yeah,
Some
I mean,
people.
it helps to explain, some of these things sometimes too with the owners who are having difficulty with it. I mean, if you look at, a situation, I mean, we can keep talking about repairs in this vein. So, like, if you've got an owner who comes to you with a brand new house, let's say they got a brand new A class, new construction property,
Mhm.
and you can sell it to them by saying, hey, look, I've got to make the money somewhere. I can either charge maintenance fees or I can increase management fees, because I got to make the same amount of money in order to pay my employees and provide all the services. So would you rather that I charge everybody across the board 2% higher on management fees, so your fee is going to go up? Or does it make more sense, Mr. Owner, with the A class property that doesn't need any maintenance? for me to only charge the people who are getting the maintenance work done. It makes a lot more sense to that owner when you explain it to him that way. It's like, oh, yeah, the people who are getting the services should pay for the fees instead of everybody paying for it. So I mean, there's lots of different ways you can deal with this. You just got to think it through.
Yeah,
And that's the benefit of like a sales playbook is that you have to think it through and come up with this stuff ahead of time. And then you got those responses ready to go.
agree. All right. So I've been dealing with my clients for years now, a couple years. I didn't have these fees. I was the guy that just said, look, all I do is charge you a $99 a month management fee. And now I want to start rolling these out. You probably come across this a lot. What's the advice you have? Do I grandfather in people who are already clients? Do I only roll it out to new people? What does that look like when I want to go from kind of traditional flat fee or no fees, I should say, to hey, there's some real economic incentives here and it's in everybody's best interest. What does that look like for a business?
I mean, usually the best way to do this is to roll it out in like a brand new management agreement. So, don't just send a fee list out to people. That's not a good way to do it. What you want to do is put together a new contract, and then you're going to tell your clients, "Hey, just so there's a lot of things going on in the industry. Laws have changed, there's new regulations, new technology we have to invest in. There's a lot of things going on. We have to put out this new contract to really memorialize and codify the way we do business. So we're going to send that out to you for signature. Guarantee you send that out. 90% of your clients are going to sign that. It's not going to be a problem as long as you've been providing a decent service. So, if you are providing terrible service and you send out your clients this update, it ain't going to go over well. So, the first thing is to make sure that your clients don't hate you. So, that's kind of the first part to it because this could be a trigger for problems there. But as long as your clients are happy, you're not gonna have a problem. There's another, consultant over in Australia, his name's Darren Hunter, who, really sort of introduced some of this fee stuff into the industry, maybe 15 years ago in the States, and he always gives people the example, you've got a barber or a car mechanic that you love. If they raise their price on you 10%, are you gonna go to somebody new because of that 10% price increase? And, if you're at a conference and you ask this question, nobody raises their hand to say they're going to switch to a different hairstylist over a 10% increase because what's going to happen? They're taking a real risk to do that. They might get their hair butchered. They might get ripped off by that car mechanic and they've already got somebody they trust. If they trust you, if they like you, it ain't going to be a problem. So I mean that's the thing you should do. I would say that if you are really, really concerned about this, if you're worried that you're going to have a bunch of clients who aren't going to take it, do it in tranches. Send out 10% of your clients a new management agreement, see how it goes over. If you get no objections, you're going to be fine. Just send it out to everybody else. If you get a bunch of objections, then you might need to tweak some things. You might need to look at it and say, okay, what are the people complaining about? And maybe that won't work in your market. You have to kind of tweak things. Every market's different. But, don't be afraid to do it just because of that concern.
Mhm. All right, you had me until you were like, wait, you actually have to be having happy customers to charge more? I don't know, it seems unrealistic, but it's a great point. And I'm really glad that you actually brought that up. It's like, okay, yeah, you don't raise your fees when you're not even providing the value that you're paying for. But when your clients are happy, you look around and you say, okay, maybe we can charge a little more. And I'll just share, in multiple businesses, whenever we raise prices, I've always grandfathered in existing clients for a while and I've tested it on new prospects. And I'm like, well, if new people will pay it, I'll have all the confidence in the world to go back to my current clients and be like, every, if you don't want to pay it, that's fine because everybody else that's coming in the front door is. So that's just something I've always thought is like, if you can't sell it to new people, maybe you can't sell it to your existing clients, right? So I like to start there. That's just kind of
I
my
love it.
so, yeah.
Great idea.
That's what we've always done. We raise prices in multiple businesses. All right. All right. So long term, right? Because we know, I mean, I think, I shouldn't say we know, but I will say, I think that you and I would probably agree that a lot of success in property management comes from longevity of clients. So what's the balance of like maximizing fees? Does that often cause clients to leave? Are they less satisfied? Are we retaining them? What have you experienced as you've introduced these fees?
No, I mean, I would say the opposite is true. What I typically find is that the companies that are bringing in low overall ancillary revenue are the companies that are providing lower quality service. And as a result, their churn tends to be higher. The
Mhm.
companies that have the higher revenue per door are usually the companies, I mean, unless the owner's just pocketing all the money, I mean, you could just be pocketing a 50% profit margin and then it's not going to do any better. But for the most part, companies are reinvesting this into their business and improving their service, so churn actually goes down for the most part. So, it's people are concerned about losing business because of raising fees, but what they really need to be concerned about is I'm not making enough money to provide the best service I can, and clients are going to churn because of that. That's the real issue.
Well, I think, that goes that needs to have a like a bold and an underline on it for sure, Todd, is that you're not advocating to just get, fat and happy by charging more fees. What you're basically saying is you're able to distance yourself as a professional. You're able to reinvest, have better people, have the better business, have slack in the system, which we all know is important. So everybody is not like pulling their hair out running around from like one call to another, you're able to create redundancy. You're able to create competitive advantage as a company, which the client then says, yeah, there's a reason why I feel different when I walk into Nordstrom's than when I walk into Walmart, right? People would be very happy if Walmart just started charging Nordstrom's prices tomorrow. But I think what, I just really want to like bold and underline is you're saying, yes, this will make you more profitable and this will make your life better as a business owner. But the real model here is to create an experience that you wouldn't be able to create if you didn't charge these fees. Is that fair?
Yeah, yeah, absolutely. I mean, that's exactly right. Now, I mean, you should, of course, get some extra profit out of this. I mean, you should be a profitable business, and profit is not a dirty word, contrary to what some people think. That's profit's
I
a
agree.
good thing. But, if you're generating, crazy margins and you're not providing good service, then you're doing something wrong. So, I mean, it really should be going into improving the business. And then, the extra profit you're getting out of it is a nice side effect. But what we're really trying to do improve the lifestyle of everyone who works at the company, improve the service you're offering, improve your service to your residents. All of this should be part of the mix when we're starting to do this.
Okay. Thank you for, I wanted to really like, double tap on that, make sure that everybody was understanding what we were talking about. Now, on the flip side, talking to hundreds of property managers all over the country, and a lot of property managers, Todd, I think you can relate to this. They start as real estate investors and they start their property management company because they say, I just can't trust anybody else to manage my property. So, therefore, I'm going to become a property manager. A lot of those people would push back on additional costs, right? They're very, bottom line driven, X's and O's. I got to spreadsheet this thing out. And I think I will just say, you may or may not agree. There's a lot in business that you can't put in the spreadsheet for sure. That's hard to explain. And I think that's what separates the pros from the amateurs. But specifically, this is the biggest question I get asked when we talk about this. We love referring clients over to you. And I think that again, like you said, the bigger the economic engine, the more you can deliver, the better the result. But there's a legitimate question we get all the time, and I think that I'd love to get this, on tape with you. It is about the risk of kind of optimizing fee structures that might alienate what consumers would consider themselves as budget conscious, right? So real estate investors do live and die by the spreadsheet, right? The cap table, the IRR, like the NOI, like we have the flashcards. I don't know if I have any on my table, but we know all the acronyms, right? People judge themselves based on performance, right? Are we working against the goals of our investors? And does that cause us to lose business, or is that okay? That's really the big question. I'm sure you get these questions all the time, right? Are you
Yeah.
losing business? Are you working against the goals of a lot of our investors?
I mean, I think the first thing I would say is every market is different. So, there's a big difference between a market that is heavily investor focused, real professional investor focused, as opposed to a market that is mostly accidental landlords or small time investors. Those are different markets that you have to tailor your operation and your fee structure to differently. If my main customer was a hardcore investor who owned more than 100 properties, I would probably need a different fee structure in order to attract that kind of client. But that's not my client. My client is, the accidental landlord. So I mean, it's a very different type of person you're appealing to there. But at the same time, I mean, that's not to say that you can't charge anything to a professional investor. What you need to be able to do is show the value they're getting. So this is one of the reasons why it's so important to track so many numbers in your business is you want to be able to go to that investor and say, "Hey, look, yeah, the guy down the street doesn't charge you an inspection fee or whatever it may be. But the average industry eviction rate is 3% with a property manager. My eviction rate is 0.5%. Is that worth anything to you? The average property manager has this for their delinquency rate. This is mine. Is that worth something?" And you can start to show these things. The biggest number that I always show people is days on market. If your days on market, Show Mojo just put out the latest data. It was like over 50 days. I think it was 51, if I
Yeah.
remember right. If you can show that, if you can show that to an owner and say, "Hey, look, my competitors are leasing properties in 51 days. I'm doing it in 15." How much money is that worth to you? Is that $100 inspection fee matter anymore when you made $2,500 extra in rent that the other guy wouldn't have gotten you? So a lot of this stuff plays into that conversation. But yeah, every market's different. Every company's different. Every target customer's different. So that's why I consult on this stuff is I can't just throw it out to everybody and say, "Here, buy my list of fees. This is what you should charge," because that's not going to work. Not only is it an antitrust issue, it's also just if you charge what I charge and you're in Columbus, Ohio, ain't going to work. It's a completely different market that you have to structure things differently. So everybody does need to remember that.
That's great, Todd. I love that you're advocating for the salesmanship of these. So obviously, property management is a very operationally intensive business. That's one of the things that I've just learned by, coming into this industry from outside. People obsess over what I like to call the craft of property management. So I say rent scales in the business of property management. I think that's what you're talking about as well, Todd. The craft of property management is not to be taken lightly. We are managing assets, we are creating well beings, we're providing housing. The craft is very important. But if we never look up from the table and think about anything bigger than the craft and never focus on the business, eventually we're going to run out of the resources and the ability to provide the craft of property management, which is a really valuable service. So I'm reminded of I love this quote from Peter Drucker. All business is just marketing and innovation. And I'm a big believer in that. Like, yes, don't get me wrong, the craft of property management is important, but you can go to an in-arbor event and you can learn exactly how to do tenant screening. And unless you're innovating that or you're marketing on that, you're really not building the business, right? And so I just want to say to you that when I see kind of the financial engineering of how you charge and how you're defending it, and how you're building a different business, you really are innovating the product and you're focusing on marketing. And that's why you're growing. So it is just really it's a reminder that like that quote from the 60s is still very alive in everything, including property management. All business owners should be prioritizing is marketing and innovation. And a lot of the other stuff becomes a commodity. Would you agree? Any final thoughts on that?
Oh no, I think I agree with all that. I mean, the other thing I would say is you mentioned we are growing, so I think that's important for people to understand. Yeah, we charge a lot of money, but we're growing 12 to 15 doors a month despite that. So,
Yeah.
if you're telling me you can't grow when you're making a lot of money per door, I'm here to tell you that ain't the case.
Well said. Todd is the co-founder of PM Assist and owner of Revolution Rental Management. He's a longtime speaker in the property management industry. That's how I got to know him. You'll see him at all the events. And by the way, he is also probably the loudest person I know on social media. Todd, don't always agree with you on social media, but I always appreciate you. Thanks for being here.
Of course, thanks for having me, man. Appreciate it.
This episode is brought to you by Strategic PM, the magazine for property management entrepreneurs and executives. If you go online to strategicpm.com today, you're going to find an entire website full of content
written about your industry and by your peers. And it's completely free to sign up. Just go ahead and click on the create a free account right in the upper right-hand corner. When you click on that, not only can you create a digital account, but you can actually add your mailing address and we will send you a free 1-year subscription of the print magazine, which will be showing up in your offices every single quarter. So if you take a look inside the magazine, what you're gonna see is that we are focused on growth. We've got 5 pillars of strategic PM: vision, strategy, culture, marketing, and experience. You're gonna be seeing some great high-class content from some of the best thought leaders in the industry talking about the matters that matter the most to your business. So sign up for free today at strategicpm.com and look for the magazine in your office. Thanks for joining us today, and I actually hope to hang out with you in person soon. So I want to go over the event calendar and share some notable events in the industry that we might just see you at coming up. First off, in just a couple of weeks, we'll be heading out to Colorado Springs, Colorado for one of our favorite conferences every year, the Narbonne Broker Owner Conference. That is March 24th to 26th. As I said, in Colorado Springs, a lovely place to visit, and I hope to see you guys there. Also, we may see you out in California, April 16th to 18th at Cal Narbonne's 2025 Conference and Trade Show, which this year is in Huntington Beach, California. Again, what a great place to visit. So if you're in California or going, look out for us and say hi. And last, in May 21st to 23rd, there will be the Rentvine User Conference in Tampa, Florida. And if you're a customer of Rentvine, it's probably already on your radar, and I hope you can make it. Well, that's it for us this week. Thanks for joining in and learning about the latest tips and trends from the top residential property managers in North America. Please be sure to join us every time so you don't miss your competitive advantage. Check out all the latest going on in property management and get details and show notes about today's show and guest. Just head over to strategicpm.com. That's strategicpm.com. And that's what's happening this week in PM.